Random House Assets presents Changewave Investing 2.0, read for you by the author, Tobin Smith. Why do investors need Changewave 2.0? The original Changewave Investing was published in June of '99. Why a new version so soon after the original? Well, because just about everything about Changewave Investing has changed or been updated, as we planned it would, I might add. Everything except our core philosophy of using high magnitudes of change to help everyday investors like you find the most lucrative opportunities for investment profits independent of Wall Street's conflict-ridden analyst system. Our goal, as always, is to teach you how to find the genuinely transformational economic, technological, regulatory, and strategic shifts in an industry or company that we call changequakes. These turn into high-octane, irreversible waves of growth we call change waves. Now, finding and analyzing great magnitudes of change is still the most reliable radar system that we found for finding monster growth stocks. But while Changewave investors were using our simple buy and sell approach to riding the wealth-building waves of creative destruction and corporate self-renewal, problems were surfacing elsewhere. Congress, for the first time, held hearings on June 14, 2001, on the wealth-robbing practices of the cheerleading, self-dealing stock pushers masquerading as securities analysts. What Congress wanted to know was why only 1% of analysts' recommendations were a sell. At the same time, American investors were losing roughly $4 trillion of newly created wealth. Not surprising to our Changewave investment community, the real meaning of the unspoken Wall Street motto, "Whose bread I eat, his song I sing," was finally made clear to the rest of the country. Loyalty on Wall Street has always been to whoever paid the most, and it always will be. The meltdown of technology and internet stock prices in 2000-2001 seems to have helped much of the general investing public realize that if they are going to reach their investment goals, they couldn't rely on Wall Street's investment advice. As Representative Richard H. Baker, chairman of the House Financial Services Committee, said in his opening statement of the hearings, the foundation of the free market system is the free flow of straightforward, unbiased information. And I must say, I am deeply troubled by evidence of Wall Street's erosion of the bedrock of ethical conduct. He went on to quote from a Harvard and Wharton Business School study that stated, "Our evidence suggests that the coexistence of brokerage services and underwriting services in the same institution leads sell-side analysts to compromise their responsibility to brokerage clients in order to attract underwriting business." As Benjamin Cole, a financial journalist and author, testified before the committee, what the general investing public doesn't realize yet is that Wall Street research has become hopelessly corrupt. But in reality, it's not fair to pile on the sell-side analysts. They are only doing their job. The point is, their job was never to deliver unbiased industry and company analysis to help advise individual investors. Their job is to help institutional investors to take a pulse, see what others are thinking, and then decide which side of the story they believe in, period. Changewave Investing is an alternative to the Wall Street analyst system, and it has come at just the right time. As highly regarded Wall Street analyst Andy Kessler states in the Wall Street Journal in July of 2001, say goodbye to analysts. The SEC's regulation regarding full disclosure has already wiped out most of their value. Money managers do their own work, and the public will have to as well. With the democratization of the financial markets, we are all analysts now. Well, if we are all analysts now, consider this book your first training guide. Wall Street and its participants are in the game for one reason, to make themselves rich. If nothing else, I hope the ideas we first brought forward in our Changewave approach have proved the concept of independent analyst is at best an oxymoron. How does Changewave Investing help the individual investor remove himself or herself from the Wall Street analyst quagmire? Simply put, Changewave Investing offers investors a few simple rules to accurately analyze and profitably ride wealth-building waves of transformational change, usually before the analysts have even recognized them. Simpler yet, Changewave Investing is about you putting your investment capital on the winning side of change by learning how not to be dependent on Wall Street research. Perhaps more exciting, thousands of like-minded Changewave investors have banded together to share their Changewave discoveries, making our alternative approach to investing all the more attractive to time-constrained investors. Changewave is still about change. Why our fixation on change? Because irreversible, non-cyclical change, or what is known on Wall Street as secular change, more than any other economic power, creates the opportunity for profit. And, as the great internet stock bubble so painfully retaught investors, the only thing that creates true economic value is profitability. Thus, non-cyclical change creates the opportunity for the creation of massive profitability, which in turn drives an equally powerful creation and destruction of economic value and wealth. In short, if you want to find really big monster stocks, you first have to be able to find the monster transformations within the economy before everyone else catches on, before Wall Street starts pumping up their new, latest, and greatest investment banking client. The before everyone else part sounds like a tall order, but take heart. The velocity of change in the business world has continued to accelerate in recent years. As the renowned technology guru and futurist Ray Kurzweil points out in the April 2001 edition of Talk magazine, progress is becoming so fast that it will confound our ability to follow it. In fact, if you're feeling overwhelmed by the rate and magnitude of change in our world today, I have bad news. It's speeding up. According to Kurzweil, while most forecasters use linear models to predict the future, the fact is our rate of progress now doubles every decade, which makes our rate of change exponential. Exponential rates of change? History proves Kurzweil out. The 19th century saw more technological change than the 9 centuries preceding it. In the first 20 years of the 20th century, we witnessed more advancement than we did in the 19th century. Change over the past decade dwarfs the rate of change of even 30 years ago. We expect to see a century of progress over just the next 20 years. In a linear changing world, this amount of change, according to Kurzweil, would take 200 centuries. Of course, this explosion in transformational change is driven by the explosion in Internet communications and information technology. Despite the collapse of Internet companies, the Internet itself continues to grow at blinding speed, transforming traditional companies in a myriad of ways. This information transfer on steroids feeds on itself and thus accelerates the pace of change. But as unsettling as the ever-increasing rate of change may be to your senses, exponential rates of change mean equally high rates of wealth creation. There had to be some benefit to mind-numbing rates of change, right? The good news is ever-increasing rates of transformational change mean ever-increasing opportunities for you to get rich investing. We'll teach you the basics of becoming a proficient and profitable change analyst. In my opinion, developing your skills as a change analyst, that is, accurately analyzing incidents of change in the economy in terms of their magnitude, impact, and understanding who is the primary beneficiary of such change, is the most important investing skill you can develop. Perhaps the best example of how exponential versus linear rates of change affect our lives is to quickly look at how the world and our investment tactics have changed since we first published Changewave Investing. Let's start with the concept we fought so hard for years to validate, the emergence of a new phase of economic growth. The new economy became the real economy. What new economy? There is no new economy, as some called the post-95 economic age, started by the emergence of an ultra-competitive, ultra-productive global marketplace based on a common standard method of communication, that is, the Internet. How do we know? Alan Greenspan told us. Years ago, we had a daily argument with economists, investment professionals, and portfolio managers about the economic, industrial, and social ramifications brought about by the Internet and its single unifying system for data, voice, video, audio communications. We used the term new economy as a linguistic weapon in our defense of our assertion that we had entered an era with a new engine of economic growth. But many took this concept way too far. We don't have a new economy per se. We simply have the real economy. But because of massive changes in its political, technological...
Sample complete. Ready to continue?